Hey everyone, welcome to today's AMA session. Today we have a very special guest, Alan from Darley Technologies. So Darley is one of our early backers, and they make it possible that we can work on DIVA protocol. And yeah, so welcome Alan.
Thanks, Laddie. Yeah, so
Yeah, maybe
shall I?
maybe you give a brief introduction about yourself and also Darley Technologies, so people know who you are. And yeah.
Yeah, yeah, for sure. Um, so, so let me begin with a brief intro for Darley, and then what I do there. Yep. So, Darley Technologies, right? Our core business is providing liquidity for options. So here it means we're like quoting on order books, maybe like 24/7 on nearly all centralized exchanges where options are traded. Plus, we offer kind of a bit more recently these OTC trades where we're able to quote like baskets of products, like option strategies, like covered calls, butterflies, whatever. So I mean that's kind of our core competency, right? And a little about the history of the business. So we started Darley, say, now it's a little over 2 years ago, basically to complement our sister company DWF, who were already, say, very, very strong market making futures and spot markets. Right, so with both companies together, we can cover more or less the whole spectrum of products, right, from spot to futures to options to all these complicated strategies. Right, and at the time we founded the company, like 2 years ago, say the crypto options market was kind of minuscule, right, compared to the spot market. I mean, probably less than 1%. But if you compare it to traditional markets, like if we take US equities, for example, their options trading volume is more than, say, 30% or so, or 30 times the spot volume. So, like 2 years ago, we're basically making the bet that crypto markets will eventually mature into something a bit closer to TradFi, right? And even today, I'd say options volume is still tiny compared to spot. It's a bit more than 1% now, but I say it's still like growing, while trading volumes on other markets, spot and futures and whatnot, has basically collapsed during this crypto winter. So far so good, right? And I think it kind of also bodes quite well for DIVA.
Yeah, thanks a lot.
Um,
Thanks a lot, Alan. Yeah, as you
yeah,
mentioned, I think in traditional finance, the derivatives market is huge, right? And as you said, like we are really early in crypto. And I mean, you decided to invest in DIVA protocol. Maybe you can share a little bit why you found DIVA protocol
yeah,
exciting and what opportunities you see for DIVA protocol in the future.
yeah, absolutely. So so maybe I'll just start with stressing that we're not a VC. We're not like a venture capital business, right? It means we actually only invest in very, very few, very selected projects. And maybe also a bit from kind of how I view these kind of investments. So I handle like the risk risk and a bit into the strategic investing side for Darley. And you may ask, it's a bit like strange why the risk guy would be handling some investing, right? But I kind of like to look at it from the perspective that investing in projects which are adjacent to our core business of options trading, right? It's a way for us to hedge against future disruption. And so maybe you can just keep that in mind. So why did we choose DIVA? Because we kind of come across many projects. So number one, so it's very clear that DIVA protocol, it's very close to our core business, right? So what that means is we can add value to the project itself, beyond just financial support. So things like technical expertise, obviously providing liquidity to the options that are created using the DIVA smart contract. So I think this point is really important, that we're able to add value here beyond just money, right? So second reason, I like how general this protocol is. I have to say you guys did a great job in designing it to be so general, meaning there's kind of so much that can be built on top of it, right? Things like prediction markets, insurance products, of course options on crypto prices. It's kind of incredible, right? Plus, so here I quite like the idea of investing in kind of the picks and shovels. You know this saying from the gold rush? So I think sometime in the 19th century, if I'm not mistaken, gold was discovered in California, right? And tens of thousands of people went and rushed there to try to dig up some gold for themselves. But you know, the people who really benefited from the gold rush, it wasn't the diggers who were out there trying to find the gold, right? It was the people who were selling equipment to these diggers. I think DIVA is kind of like these picks and shovels. Right? It's can become like one of the standard building blocks for DeFi, and that's kind of what we want to push, and what one of the really attractive points for the project.
Yeah, that's a nice analogy. First time I hear, but yeah, thanks a lot for making this analogy. And yeah, let's hope so that we manage to establish DIVA as the operating system for all kinds of derivative applications. That's at least our goal. And yeah, we are super happy to have such experienced market makers backing us and helping us with the liquidity, which is extremely important, not only for DIVA protocol, but in general for any other DeFi protocol.
Very welcome. Yeah, and I have to say, like lastly, but not least, reason why we're kind of very comfortable making this investment decision. What is it, like a year and a half ago, something like this. So I know Vladimir, right, from before. So we worked at the same company. I also knew beforehand that he's a solid guy. Maybe it's a little bit cliched, but when investing in these kind of early stage projects, the team is basically all important, right? Probably even more important than whatever the initial idea was. And frankly, I trust him. I trust his team to execute, and this just makes the investment much easier, and lets me sleep at night knowing that the project is in good hands.
Thank,
Yeah.
thank you very much for the trust that you have in us. So we try to not disappoint you. Okay, cool. Yeah, thanks. I think I would continue with my next question. So I have a couple, and yeah, so I mean, the derivative space in crypto is still early, as you said, but do you already see like some trends, what works, what doesn't work? I mean, you must have some insights that could be interesting that you might want to share in the round.
Yeah, sure. So, I mean, in this DeFi derivative space, I would probably maybe start by separating the space into like two broad categories, right? So you have these kind of trading platforms, or DEXs, like DYDX or Uniswap, um, is one kind of category, and another category, don't really know what to call them exactly, but platforms where users can earn a yield. So an example would be Ribbon Finance being like the OG decentralized options vault there. So for the first category, these DEXs, I kind of expect a lot more to come onto the market very soon, especially now with a focus on derivatives, like swaps and options. I kind of see also different models, how these DEXs work. I guess perhaps more of a trend towards order books than these AMM pools. So maybe with these DEXs, I think they have, like the ones that are upcoming, let's say, under development, they have a few different models, like I said. So there's like this hybrid model where basically settlement we have on chain, but the order book is basically run on one of their servers, right? So in order to be a bit faster, low latency, and can handle greater volumes. Others are kind of a bit more on-chain or fully on-chain, but honestly, I don't know if on-chain is yet fast enough for a true order book system. This I don't know how it plays out, but I think either way, there will be more DEXs and more trading volume, and with a greater focus on what's been missing so far, which is the derivatives, right? The swaps and the options.
Yeah. Okay.
Um, yeah,
Okay. So just to summarize, so on the DEX side, you basically see like a trend going away from AMM to
yeah,
order books. Can you explain a little bit why and why for derivatives and just yeah.
yeah. I think a at least if I speak for options, I think it's very very difficult to build like an AMM that that can correctly price options and then handle all of the hedging and stuff associated. So I think it's kind of a huge technical challenge, and I just don't believe that one can really fully automate this. Um, in which case, if you have your exchange with an options exchange with an AMM, in all likelihood, this AMM is just going to lose money. Frankly, I think. Um, so that in this is why it's one of the advantages of the order book system, that you can then have professional market makers like us come in and provide liquidity there. And yeah,
I think also order books have the benefit that you can basically factor in anything that you think is required to quote a price, right? While in an AMM, you're quite limited what you can do. It's basically just the balance of two assets that
Yeah,
defines the
exactly.
price, right? And I think also for us, when we thought about for the DIVA app, how to enable the trading, I think it was clear for us that AMMs are quite limited. That's why we chose 0x protocol, which is basically like a decentralized limit order protocol. And yeah, market makers or traders can basically quote prices based on their individual models without following like a how to say a pre-programmed
Yeah,
setup.
exactly. I mean, everybody is then free to express their views on what the correct pricing should be, right,
Yeah,
on these products. Yeah.
exactly. Cool. But who knows? Maybe there will be some teams coming up with innovative solutions. Maybe if the space grows and people will see more and more need to develop AMMs, maybe who knows?
Yeah,
There
I
will be
mean,
something exciting.
yeah, I certainly seen kind of a lot of the projects that have pretty good backers,
Mm.
kind of trying to develop these AMMs. But yeah, I kind of think it's an open question how well they work in reality.
Yeah,
Let's see. Let's see.
yeah.
Yeah. But yeah, if we go to the second thing about these yield earning platforms, 'cause I think these are also these are a massive part of DeFi. Um,
Can you explain how
so
these work, just
yeah,
for everyone?
yeah. So on these platforms, you typically deposit some cash or some tokens into a vault, and then your tokens are locked for a certain time, let's say 1 week. And on these platforms, they basically give you a yield on these locked tokens. So how they generate this yield, it's historically been kind of simple derivative strategy, like selling covered calls or selling like cash secured puts to generate this yield. But I guess here a trend would be towards kind of more exotic structured products to attract users. I mean, they have to do something to attract users, because if you kind of compare the TVL, like the total value locked, this year compared to, say, its peak last year, it kind of fell off a cliff along with the bear market. Right? Basically, after the lunar crash, kind of everybody pulled all their funds. So, so I think here, kind of, I see like a lot of new platforms offering these more exotic products to try to attract users, like the Sega Finance or others. And maybe a second trend is just more platforms offering products on a wider variety of coins, right, on different blockchains. So maybe last year you could only lock up your ETH or BTC or something. I mean, this year now there are many platforms catering to all the altcoins, right, to allow kind of users to generate yield on that. So yeah, I mean here overall I kind of expect a lot of growth to come, even if volumes have dropped a lot recently. Because I mean, if you think about it, right, anybody can use DeFi to generate passive income on the tokens that you hold. So in the end, kind of every single human being is a potential user, right, and can benefit. And if you compare this to centralized finance or traditional finance, there are kind of so many of these investment products where you have to be an accredited investor with income above a certain level and 5 million in the bank or something to access. So there's kind of all these barriers to accessing, these yield generating products that help you grow your wealth in traditional finance. So that's kind of why I see there's a lot of promise in DeFi, especially these yield platforms, right?
Yep.
And I don't know, Laddie, I mean, we're discussing building like a kind of DeFi options vault type thing with DIVA as the kind of building blocks. Do you want to add a bit more?
Yeah, exactly.
Yeah.
Exactly. We're actually exploring the idea of more or less replicating to some extent the success of Ribbon, basically offering products that are defensive in nature that could give you a yield that is higher than you get, say, from lending out your assets. So yeah, expect some updates to come. The designs are in the final stages, so we will start implementing the app soon. So it will be the second app, and we have more apps that are already in design that will be built all on top of DIVA protocol. So yeah, more updates probably when we get a bit closer.
Yep, no, definitely very excited.
Yeah. So
For
Alan has
this.
already seen the designs. That's why he's excited. Hope you guys will be as well when we share it. Awesome. And maybe one last question for today. I mean, you started market making on centralized exchanges, right? Now, how did your view change after this FTX disaster? Do you consider like a strategic shift, moving more into DeFi, or like has anything changed? And if so, what?
Yeah, um, yeah, that's an interesting question. I mean, so trading volumes today, they're still very much on centralized exchanges, and so we still trade there, but I have to say we are a lot more careful or, with funds on exchanges, particularly managing the capital, just leaving enough capital for trading, because we kind of hear a lot of rumors about contagion, right? Not just FTX now, but let's say other centralized exchanges. I'm sure you also hear similar rumors. But I have to say that kind of our long-term view was always that DeFi will grow probably faster than CeFi, and this has not changed, because I kind of mentioned, right, basically every single human being is a potential user for DeFi. So, and let's say more and more institutions become interested. I think it's clear that there's a huge amount of potential growth in this area. And I mean, that's why we invest and continue to support kind of DIVA, because we want to be there when we want to be like well established and so on when DeFi explodes, right? I think with this FTX kind of disaster, let's say, so I think short term, kind of everything will be depressed a bit. Prices, like valuations, trading volumes, kind of everything, everywhere, kind of including in DeFi, kind of as people wait and see. Because if you think about it, these guys had had like many fingers in many pies, right? And it's not yet clear who has exposure to FTX or Alameda, like whether direct exposure or indirect. It will take a bit of time for this whole thing to unfold. So, people are waiting and seeing, but I think this has also caused kind of a loss of trust in other centralized exchanges that might just accelerate this trend towards more rapid growth in DeFi.
Yeah, I also hope that like this was an eye opener, though very, very painful for many people. But I think it just shows like if you trust your funds to a centralized party, I mean that's the risk, right? And it's a real risk as we have seen. And I mean, crypto was created in order to be independent, to own your assets, right? And I think we have to go back to the roots of crypto and why crypto is there in the first place. And yeah, I share the same view. I think it will just the trend towards DeFi will accelerate after the dust has settled. And
definitely, I think and maybe hope more that this event will also drive these DeFi platforms to become more professional, right, and innovative as they gain more users, right, and maybe for selfish reasons a bit more standardized, because at the moment it seems like many projects build kind of everything from scratch, and it's a bit hard to then integrate to. I mean, then kind of liquidity becomes very fragmented amongst the different
yeah,
DeFi platforms. Yeah. But I don't know, I think it's. I think we're on a good. It was a good lesson, albeit painful.
maybe one brief story to wrap this thing up. So when I was studying, I was interested in betting, and I was kind of like watching sports betting, just very small amounts, and I was watching like the quotes on different exchanges, and like already back then when I read how to exploit this arbitrage, this obvious arbitrage, right? I already read, okay, you have to be careful because you're basically trusting your funds with a bookmaker, right? And then that bookmaker can go bankrupt. And I mean, it's just funny. It's actually the same as trusting your money with centralized exchanges. So yeah, I think we will survive that and we'll grow stronger, hopefully, after that. Awesome.
Yep.
Thanks a lot, Alan. I think in the interest of your valuable time, I think we can wrap it up. It was super interesting. I hope you guys enjoyed it. And yeah, in 2 weeks, we will have our second partner on our AMA call, DWF. And yeah, looking forward to see many of you guys there. Thank you.
Thank
Have
you.
a good
Thank you.
one. Bye bye.
Thanks, Maddie.
Okay, thank you, Elan.